Have you ever wondered how you could potentially increase your wealth and gain financial freedom? Maybe you've heard about people making a fortune with something called cryptocurrency. Today, we're diving deep into the world of digital money, a realm where traditional banking rules are rewritten. Cryptocurrency is not just a buzzword, it's a revolution in finance that has made everyday people into millionaires. Now, I know what you're thinking. You've seen the headlines. The US federal government has been expressing some concern. But let's clear the air. The world of finance is changing. Those who understand these changes are often the ones who benefit the most. The potential for high returns, accessibility, decentralization, and groundbreaking technology. These are just a few reasons why so many are turning their attention to cryptocurrencies. Are you ready to ride the wave of this financial revolution? Stick with us as we demystify the world of cryptocurrency, from Bitcoin to Ethereum and beyond, and explain what it is and how it works. Remember, knowledge is power, especially when it comes to your finances. So hit that subscribe button, ring the notification bell, and let's embark on this journey of discovery together. Welcome to Make More Money, Build Wealth, your ultimate guide to understanding how to increase your wealth. Remember, we always encourage responsible investing and want to remind you to do your own research before making any investment decisions. All investments are subject to market risk, including the possible loss of principal. Since this form of investing is so new, we feel like it's important that you understand it, so let's dive in. So, what is cryptocurrency? It's a type of digital or virtual currency that uses cryptography for security. It operates independently of any central bank and is distributed across many computers around the world that manage and record transactions. The most well-known cryptocurrency is Bitcoin, but there are many others including Ethereum, Ripple, and Litecoin. We will talk more about these and the other top 10 cryptocurrencies in a few minutes. Cryptocurrencies typically use blockchain technology, which is a decentralized technology spread across many computers that manages and records transactions. This technology brings security and transparency to every transaction. This form of currency uses what are called crypto coins, like Bitcoins or Dogecoins. These coins are traded like fiat currencies, such as dollars or euros, and their relative values change every second, either up or down. You may be wondering, why would any intelligent person want to invest in cryptocurrencies? Well, it can be appealing for several reasons. Despite their volatility, cryptocurrencies have shown the potential for very high returns compared to traditional investments, and because they are not tied to traditional economic indicators, they can also offer portfolio diversification. Another thing that some people like is that they're accessible to anyone and can be bought and sold 24/7 from any location with an internet connection. Many cryptocurrencies are built on blockchain technologies that have the potential to transform various industries, from finance to supply chains. And finally, some investors are drawn to the ideological aspects, such as decentralization and the potential for a currency free from government control or the outrageous manipulation of fiat currencies. However, as I mentioned earlier, investing in cryptocurrencies is also highly risky. The market is extremely volatile, largely unregulated, and can be subject to significant price manipulation. It's also complex, and understanding the underlying technology can be challenging. Therefore, any investments should be done carefully with thorough research and ideally under the guidance of an experienced financial advisor, if at all. Let's talk a bit more about the potential advantages of crypto over fiat currencies, which are sponsored and manipulated by governments around the world. Cryptocurrencies offer several advantages over traditional fiat currencies. Unlike fiat currencies, which are controlled by central banks, cryptocurrencies are decentralized. This means they are not subject to government monetary policy and are resistant to censorship. Most cryptocurrencies operate on blockchain technology, which maintains a transparent ledger of all transaction data. Cryptocurrencies also use cryptographic techniques to secure transactions and control the creation of new crypto units. Cryptocurrency transactions can be faster than traditional banking transactions, especially for international transfers. They also provide access to financial systems for people in areas without traditional banking infrastructure. Although it depends on the specific cryptocurrency and the nature of the transaction, sometimes the transaction costs can be lower than those associated with traditional banking systems or online money transfers. And finally, while transactions are transparent on the blockchain, individuals are identified by public keys, not personal information. This provides a level of privacy, though not anonymity, not always available with traditional financial systems. However, it's also important to note the potential downsides, such as high volatility, regulatory challenges, a high potential for use in illicit activities due to its semi-anonymous nature, and the lack of consumer protections in some scenarios. I've mentioned blockchain, and perhaps I should take a moment to explain what this is. Blockchain is a type of distributed ledger technology that securely records information about every transaction that occurs on these platforms across multiple systems. It creates a chain of data blocks, each containing a list of transactions. Every block is linked to the one before it and after it, creating a secure connected chain. Here are the key characteristics of a blockchain. First of all, unlike traditional databases, which are controlled by a single entity, like a business or government, blockchains are distributed across a network of computers known as nodes. All participants of the network can view the transactions on the blockchain, but can't alter previous transactions. This transparency builds trust and accountability. Each block in the blockchain is linked to the previous block via a cryptographic hash, a fixed size string of numbers and letters. This makes it extremely difficult to alter past transactions, as doing so would require changing all subsequent blocks. And finally, blockchain networks use consensus algorithms to agree on the validity of transactions. Common examples include proof of work, used by Bitcoin, and proof of stake, which is used by Ethereum. Blockchain technology underpins cryptocurrencies like Bitcoin and Ethereum, but its potential uses go far beyond digital currencies. It could be used in various sectors like supply chain management, healthcare, and finance for purposes such as tracing the origin of products, recording patient health records, or verifying financial transactions, respectively. Let me give you an example of how this actually works in the real world. Ethereum, a blockchain platform that supports smart contracts, has seen numerous real-world applications. One of the standout use cases is in decentralized finance, or DeFi, which enables individuals to access banking services to save, borrow, and lend crypto without the need for a central authority. These three platforms as the best place to store or borrow money in the DeFi space. They offer the largest range of financial services alongside top-level security and low transaction fees. eToro facilitates trading over 75 cryptocurrencies, including Bitcoin, Ethereum, and Dogecoin. Every crypto trade is charged a flat 1% fee, which makes it one of the cheapest crypto brokers. Public.com is a social platform where you can share trading tips and get ideas from other people. They offer over 9,000 financial instruments, including cryptocurrencies and stocks from around the world. Bitstamp was one of the first crypto platforms to set up shop in 2011 and has built up trust since. It's designed with institutional traders in mind, so it prides itself on near 100% uptime. It stores 95% of assets in cold storage and offers a sliding scale of fees so that high-volume traders get the best rates. Decentralized Finance aims to create a financial system that's open to everyone and doesn't require intermediaries like banks. For example, lending protocols on Ethereum allow users to lend or borrow funds directly from others in the network, earn interest, take loans against their cryptocurrency holdings, or simply trade crypto on decentralized platforms. The foundation of DeFi Applications is smart contracts, which are self-executing contracts with the terms of the agreement written into code. They automatically execute transactions when predefined conditions are met, eliminating the need for a middleman. Compared to traditional finance, decentralized finance, or DeFi, offers several potential advantages. First of all, you only need an internet connection and a digital wallet to access DeFi applications. This could potentially bring financial services to the unbanked or underbanked populations worldwide. Second, Most DeFi applications are open source and permissionless. This means anyone can review, use, or build upon them. This is in stark contrast to traditional financial systems, which are generally closed and heavily regulated and controlled. Third, DeFi can potentially offer faster, cheaper financial transactions. This is particularly true for cross-border transfers, which can be slow and costly with traditional banks. And finally, DeFi takes advantage of the programmability of Ethereum's smart contracts to automate financial services and create new financial instruments and services. However, it's important to remember that DeFi also presents a number of risks and challenges, including high price volatility, complexity, and security vulnerabilities. It's still a nascent field, and whether it can fully deliver on its potential is yet to be seen. To provide you with some real-world context, I researched the top 10 cryptocurrencies over the past year. These are Bitcoin, Ethereum, Dogecoin, XRP, BNB, Tron, USDD, Tether, Solana, and Cardano. I found two things very interesting about this research. First was the dramatic range of return on investment performance, with Ethereum earning 66.7% over the past year, and Solana losing 53.3% during the same period. I should also mention that both Tether and USDC earned a 0% return for the year, while Dogecoin lost 3.1% and Cardano lost 41.7%. The second surprise, which should not have been a surprise, was the extreme volatility of these assets. The wild swings are actually pretty shocking. However, this is also what appeals to many, who believe that they can somehow time their investments to ride the swings up and somehow escape before the precipitous and disastrous drops in price. This, of course, is pure foolishness, in spite of the fact that many speculators have earned some pretty impressive returns. To give you some perspective, Bitcoin went from $15,880 in November to over $30,000 in June, while Dogecoin swung from a low of about 5.5 cents in September to over 14 cents on November 1st, and Ethereum went from $1,057 on July 1st to $2,123 on April 15th. These wild swings stand in stark contrast to the stable rates offered in typical money market funds, CDs, or even a run-of-the-mill mutual fund or ETF. This may be why Charlie Munger, the vice chairman of Berkshire Hathaway, recently said, "Cryptocurrency is crazy, stupid gambling, and people who oppose my position are idiots." The crypto market lost roughly $2 trillion in value last year. Bitcoin, one of the most popular cryptocurrencies, lost more than 60% of its value in 2022. And the implosion of FTX, a now bankrupt crypto trading platform once valued at $32 billion, has shaken investors' confidence as the industry feels the ripple effects of the company's collapse. Many Americans are coming to realize that cryptocurrency is just a speculative mania, and the industry is rife with crooks. James Royal, a reporter at Bankrate, told CNBC. In fact, just 8% of Americans have a positive view of cryptocurrency. On Wednesday, Munger said he's not proud of his country for allowing this crap. He's previously urged the U.S. government to ban cryptocurrencies, and may partially get his wish as the crypto industry faces rising regulatory crackdowns as the SEC sues Binance and its CEO for mishandling billions of dollars. So now you know a little more about cryptocurrency. Does this information make you want to invest or run away like you would from a grizzly bear? Let us know in the comments, and we'll see you in the next one.